right, today we are talking about kind of a transition that many business owners and entrepreneurs go through, right? Where you go through a season of wealth creation, right? Where we're focused on concentrating all your effort on the creation of wealth. And then at some point along the road, there's a shift that needs to happen for most business owners. And they transition from wealth creation into wealth durability, right? Duration. How do we make sure that the wealth that we've created is actually going to serve us and maximize it for our lifetime? So we've got a couple examples and scenarios to talk through today.
Yeah, no names. We're not gonna expose anybody for their
Mhm.
weaknesses or their strengths, really. But we've got decades of seeing people do one thing really good and then doing another thing really bad. And it's hard for them to recognize that they have weakness in this. Entrepreneurs always want to jump in and take control of it, right? And in some cases, that's really a good thing for them to do. Other times, it is not a good thing for them to do. So
Yeah.
we'll talk
So
more about
let's
that.
paint some pictures. Let's dive in with a couple examples. Maybe let's start with one that was a little bit more of like kind of a difficult transition from one to the other.
Yep. I think it starts with when there isn't a mental shift. Someone who's been either an entrepreneur or just an employee, they've been working, they have cash flow, they're used to this money coming in. And when they retire, when they sell their business, when they move over, they don't change their mindset. They still want to be aggressive. They still want to be growth minded. They're not talking about any sort of future legacies or what will this do for me 20 years from now. They're trying to change their investment profile based on 6 months, right? Based on 3 months. What just happened? Let's change everything. And when they're an employee and money was constantly flowing in, or they're a business owner, that might have been different. But to me, the biggest thing is to ignore that you're in a different position, to ignore that your financial goals are now slightly different, and to acknowledge that you have resources unlike you've ever had before. This might be the moment of your largest balances. So I think the biggest failures I see come from no change, no acknowledgement, and
Mhm.
keeping the same mindset. And I'm sure you guys have some stories, but that's the theme that I see.
I see concentration as a primary issue. So if you're building, let's say it's your first company, you're an entrepreneur, or you're just simply invested in the current company that you're in order to build wealth, you take on more risk. Taking on more risk, you might be highly concentrated in the capital that you're reinvesting into growing a company. And then we've seen it happen many times where they have an exit, and so maybe they're sitting on a pile of cash that they've never had before, and they take that and they immediately reinvest it in the next concentrated investment opportunity. And because they're excited to see lightning strike twice.
Right.
And sure, it may happen, but what I think they don't regard is the risk that they're continuing to take on. So, in the initial growth phase, there's a tremendous amount of risk when you concentrate your capital in that way. And as you transition into creating durable wealth for your life, you want to introduce diversification, especially if we're talking about you as the entrepreneur might also be operating the business. Dad, in preparation for this call, you were talking about a client where you had experience where they went from something that was their primary skill set, of which they were highly successful, and then they moved into a different industry and different skill set because they felt like they were interested. And it was outside of what they were really
Mm.
Yeah.
good at doing.
Yeah, in this particular instance, they wouldn't listen to advice. They'd already made up their mind. They're saying no, they were set, and they said, I think this is going to work. They brought in a relative that had a strong voice in this whole thing, but had no ownership. But he was given ownership without spending any of his own money. I counseled against it. I said, no, stay in the pattern that you're used to, stay in with what you normally do. Forget about trying to shelter from taxes and such as that, and they went literally from $6 million in value down to right now, I think it's probably less than three. And that's how much money was lost in a relatively short period of time because they took on a business that they thought they were smarter than the market. And we pointed out to them that the market was moving away from that kind of business and that kind of operation, having a high number of employees that they're going to have to deal with. And all of a sudden, the labor costs, the energy cost, I mean, everything worked against them. So now they're floundering. They didn't have enough working capital to make up for the mistakes. And the bank is kind of basically barking at the door saying, you got this loan and we're about
Mm.
ready to foreclose on it because we don't like your business operation. And they don't have to say, the bank doesn't have to say, we're not going to pay, we're not going to keep the loan because you're not paying the interest. Well, maybe they're not paying their property taxes on time. They're not managing their capital
Mhm.
the way the bank would like, and the bank is looking for an exit. So it's putting pressure on the I mean, it's a sad situation, and all of the people are in their 70s and early 80s. How tragic in my mind, and they could have avoided
Mm,
all of this. This could have just been set aside.
Yeah, it's hard to have that kind of perspective. Let's say you won big. I mean, this is a direct comparison to those who are highly concentrated in the market. Let's say you bought Apple 30 years ago and you're looking at your stock portfolio. It's highly concentrated in Apple, and you're like, I am a winner. Like, look at what I picked, right? And then you go to sell it and you're like, okay, what do I think today? Because you're anticipating that same degree of success is going to carry over to the next opportunity. And even though you won big once and you made a great choice, right? There's only so much that we can control. And so I think that a lot of people see that as a winner and they don't evaluate the risk that they took on to get there. And so let's say in this case scenario, they invested fully in one business and then they're ready to go invest in the next opportunity that they think is going to win big, just like Apple. Are you gonna get lucky twice? And
right.
furthermore, are you in a life stage, like you commented, where you can continue to take on that risk?
Well, I think the other dynamic that people, when they either retire or sell a business, they emotionally, away from just the finances, they say, "What's next? What's next for me?" And I think it's interesting to decouple that from, "Hey, your finances are enough to provide for the rest of your life. You can now do all sorts of adventures, whether they're new businesses or new jobs." But I think sometimes, in order to feel that they're still doing what they want to be doing as their time, they want to take that capital and go again. And serial entrepreneurs do this all the time. They're very successful, but they're willing to take on the risk. There's a number of folks who, when they're 70 and they want to keep working, they feel like they want to restart a new business, but the reality is they don't really actually want to. They just want to have something to do, and so they take
Right.
their capital and roll into the next thing. And it's important to divide those two, to say, if you're not sure what you personally are going to be doing, that's a different conversation than what should your money and your finances and your success be doing. Previously
Mhm.
in life they were the same, whereas now you're at a point where, say, the game's changed. Those might need to be different, and that's okay, but not to just fill that uncertainty with, I'm going to roll this money into the next thing.
Yeah, I'm a prime example of that. I mean, at some stage, I knew that I couldn't continue doing the kind of work that I was doing without either selling or getting help. Now, I was blessed because both of you came alongside of me, said, "Yes, this is something I want to do." It's not something that I pushed on you, but it's something that you both had skills and education to look at. But it was the greatest thing that ever happened. And we've not had any kind of what I call major conflict at all, and it's worked out really well. But that's a rare thing to happen in a business, right? It's a rare thing. We're family owned, but also I think what we need to emphasize that we are compatible. We work really well together, and I was willing to give up certain things that I just didn't want to do anymore. I lost my efficiency at it. So you have to recognize that as a entrepreneur, and you have to recognize your limitations. And I think a lot of entrepreneurs, frankly, don't. They
Yeah.
they think, well, I've done it in the past, so now I can do it again, right?
And I like that word limitations. I might also add priorities. Are working with an entrepreneur right now. He's a serial entrepreneur, and actually he's overlapping these two phases in his life, meaning that he's getting buyout on or an earnout on some equity that he held within one company. So he had high concentration. And in the meantime, he was already starting company number two and becoming increasingly more leveraged in the capital that he was investing. Now he gets the payout from company number one. It's going to cover the losses of company two, plus a little bit extra. But guess what? His work life balance, he's still working just as hard, if not harder, than he was when he was starting company number one, right? And just practically speaking, his life is in a different place. His kids are older. He's highly invested in what his kids are doing. He doesn't want necessarily to be working as many hours, even if he's equally as passionate about growing a business, right? So you talk about
Mm,
limitations. I also think about like your priorities shift over time as well. So taking that into consideration.
yeah, that's so good.
All right.
So
Well,
the
as
other,
we
as we move
talk
forward a little bit,
about the game, go ahead.
no, I just gonna say, what's changed. I think we're heading the same direction. What's changed in this moment? And I think that the focus, I think, becomes different a little bit. I mean, the key things being taxes. taxes are a much bigger issue and a bigger concern than they've ever been. In a negative sense, complexity just comes out of the woodwork. We had a client just recently that they retired and they have plenty of good income. They have a great set of assets that will fund their future. And they have now in their head, they say, we need to be doing more. We need to be investing differently. We need private placements. We need money that's not in the market, that's other places. And it's not that they're wrong. It's a great idea, but just they're just desiring more complexity. I think because they have more focus and more time. But the question is, does that complexity, is it going to bring value to them or not? And we've had some good conversations about that, but they just have this interest towards things are getting more and more complex. And I see in a couple of years, they're probably going to go the other way to say, hey, we want to be more simple. This has gotten more complex than it needs to be. So there's a desire or a need, I think, that people start moving into this overly complex, I'm going to figure this out in a new way.
Yeah, I think, again, I can address that from a personal standpoint. Psychologically, it's hard, particularly for the man. I'm sure it happens for the women too, but it's hard to step away from something that you built your life on, and to say, I'm turning over the primary work to somebody else, the younger generation, let's say. But I could admit that without the infusion of that new knowledge, like with technology, you're talking about that, Jeremiah. Technology, if I didn't have the younger people next to me, I would give up, because technology is overwhelming for somebody
Mm,
in my age group. And I'm not
mhm,
going to admit how old I am, but I've been in this business for 50 years, so you can count. So if you're listening to this, you can do your own calculations. If you can't, you probably should come talk to us, because we can help you with that. So again, times change. Now again, do the principles change? No, they don't. But the practice changed. What we do today is different than what we did 10 years ago or 30 years ago. It just is different. The
mm, mhm,
outcome is the same. You want to have accumulation of assets. And if you're an entrepreneur, you're spending so much time on your business, it's hard for you to transition out. We talk with
mhm.
clients all the time about that.
I think of a succession plan. We talk often about, even when you're at the beginning of starting a company or even in the accumulation phase of your wealth, if you're a business owner, you want to constantly be thinking about your succession plan and a clarity of goals thereafter. Is it to go from one company to another? Is it to create passive
Mm,
income? Is it to have financial security for a certain amount of time? Is it a certain lifestyle? And that's what I love about what we do, that every plan is different and custom. And so the investment goals and strategy change based on what the goals are. The hardest part is if a client comes to us and they really don't have that clarity. Then I won't say that's hard. It's just we have a different starting point. We have to have a conversation about, okay, let's reset. What are our goals? But those who can anticipate and have some forethought regarding a succession plan, regarding what their goals are over the long term, it's easier to help build the infrastructure early on that will support them. Um, yeah. So, succession
okay.
plan.
Yeah, that's right.
And it takes a lot, doesn't it, Jeremiah? You work with a lot of clients, and depending on their age, there's an entrepreneurial aspect. I mean, it's just almost genetic. They look for certain things because there's part of their nature is they want to build something, they want to make something. And you almost have to see, do you have an S on your chest? I mean, are you really Superman? You never make mistakes. So anyway, again, as you get older, you want to diversify your positions, right?
Yeah. Yeah, and I think what overlays this conversation a bit is the family dynamics. So between a husband and spouse, their desires change over time. Between siblings or generations, the family issues of how that works out, it makes it difficult. And we had a client that for years, their plan was to retire and move to Montana. They had purchased property in Montana. They were prepared to build a house out in Montana. And then as they're getting close, I think they were maybe even a year out, maybe less than that, they start having grandkids. And things shifted, and the family dynamic is they said, we're not leaving. We're not going to Montana. These grandkids are so much
It's
fun.
too precious, right?
Yeah, we're in Southern California. They're going to stay in the Southern California area. And they sold the land in Montana. They pivoted into something new, but it had nothing to do with their finances or what they could afford. It had to do with the family dynamics of what they wanted. And that was different. And had they kept the same game plan, had they just assumed everything was going to be the same, they would have missed it. But they intentionally pivoted, did something different. And theirs was driven by family dynamic.
So the strategies that are making you wealthy are not always going to be the same. So they're directional, right? They're pointing you in the right direction. And at certain points, they're going to have to change, right? Throughout retirement. And as you go forward, your tax environment is going to change drastically. And so some of the strategies that
Hmm.
served you well at the beginning are going to be different in the same year that you exit your company or you have a big payout. And then as you enter into retirement and then later on in RMDs, even taxes, not to mention the cyclical nature of the economy, all those factors are indicators that your plan is going to have to pivot and shift. And some of the strategies that served you well during a certain season, you need to anticipate that they're going to change. And so the question is, what team do you have behind you that's helping proactively navigate and chart the course for you? And the trust is going to be drawn when there's clarity regarding where you're headed, right? If they understand that and they're navigating and charting a course that is directional in that way, that's really what you're looking for.
Yeah, what's the path, right? I mean, what is your journey and where are you on your journey? Now, again, as you age, that journey becomes more real and the days ahead of you are less than the days behind you. And that I think that's what a lot of entrepreneurs struggle with. They don't admit it, but psychologically it's under the water. It's there. It's not something. I always like Charlie Munger's comment. He says, start making friends, new friends at age 81 because all of your old friends are dying. So you're going to be alone if you don't have new acquaintances and new people to talk to. I think it's really wise to do that. You want to continue to stay engaged. Nothing wrong with that, but understand what your capability is. Now you have capacity to do great things, but you don't
Mhm.
have the capability to do all of them, right?
So, we're talking about developing clarity of vision, and we're talking about some basic organization. What fits and what doesn't? Maybe early on in life, higher levels of risk fit for what you were up to and the growth that you were focused on. And then later in life, that same risk isn't going to serve you well. A lot of what we
Hmm.
do in the phase one of working with our clients is just basic account organization. Sometimes it's just complex unnecessarily. So, how do we actually simplify your, I guess, financial plan, accounts,
Hmm.
investment strategy so that they're all moving in the same direction?
Yeah. I think that decision fatigue is a big piece of, as people are looking at all the different, advisors and choices. We've had a number of clients when they first come to us, they've got, four accounts and three different advisors.
Hmm.
They thought by spreading things out, it would be a better end result. But when we analyzed their accounts, we realized, hey, everybody separately all bought Apple. So all you do is have, three different places you have to go check and they all owned Apple. Yeah, that's it,
Right.
exaggeration a bit, but the idea of moving to a season of clarity, moving to a season of simplification. And I think that the big piece here is, coming out of that growth phase to really get in their mindset. Like the goal isn't to die with the most money. The goal is to live with the least amount of financial anxiety. And
Mhm.
so what's going to get you there? Of course, you want to pass money to the next generation. Of course, you want to have some good benefits, but the idea that we just need to push for more, keep it in high gear, let's see how far we can get, just continues that anxiety and that uncertainty. Whereas if you can say, I know my plan. I know my investments. I know my future, what's going to happen financially. Man, I can live my life and not worry about this. It's a different mindset from growth to more durability.
Streamline and simplify. I like that example of it is true. We have many clients that come to us with multiple financial advisors, or they've spread their assets out across multiple custodians. That might be the type of diversity that doesn't serve you well. We talk a
Hmm.
lot about
Well,
diversity,
again,
but
the question we ask everybody is, well, what happens if you die? And the people you leave behind, what are they going to do? And they look at you like, well, as though they never had that thought in their mind. It's like, you're going to leave a mess if you don't get this stuff organized.
we're all pretty
We,
sure we're going to live forever. It's
well,
going to happen, right?
I haven't seen any, but there's only one person I know of who really beat the death thing. So again, the rest of us, we all have that ahead of us. But what we leave behind for our children is in our family, whoever the heirs are, you don't want to leave them an absolute mess that they can't put the ends
Mm.
together, right?
Yeah, yeah. I love that. Yeah, and if your investment strategy is mostly reliant on your performance, then it's probably not really bulletproof.
Now,
Um, well, let's talk about some positive examples in the last couple of minutes that we have. What was one really successful story that we have of exit and then transition into wealth durability? What's one, Jeremiah? Do you have one?
Yeah. Yeah. We have we have a number of clients, but one that comes to mind is he had a number of businesses that he was running and operating and looked at, it might be time for him to exit. But before he did any sort of movements towards exit, we did the financial planning to say, what sort of assets, what kind of cash balances do you need? If you could sell all these businesses and have an investment account, what does it need to be to fund your future? So we talked a lot about the travel and the adventures and the fears. What does future kind of look like? Backed into the right number and then said, okay, now if this is what we're selling, do these line up? And in his situation, it was wonderful that all his businesses were worth much more than what he needed. But basically turned it all from operating activity, exited, sold those businesses, now turned it into kind of passive investing with a clear plan, a clear purpose. And so he spends his days doing very different things than he did 2 years ago. But it took 2 years of mental shifts, having trust in the markets, having trust in his finances, but moving from an operator to now in essence, somewhat of a passive investor.
So in that example, how did you get him to give over control, so to speak? When he's running the business, he's controlling every part of it. So how psychologically, how did he transition?
Yeah, that's a great question. I think a fair amount of it was trust and understanding. He's an extremely bright guy. So understanding what is happening, what's the purpose of each type of investment. That was a big piece of it. The other piece is he was ready. He was ready to not be the one that was, carrying that weight every day. So when in his specific situation, I think what was helpful is when he sold his businesses and exited, it wasn't that he was right on a knife's edge. Is this going to work? It was a clear, hey, this is going to work out great. And so he had the
Mhm.
confidence to say, I'm able to focus my life on other things. And him personally, they had a health scare, he and his wife. And so, they also had a good shift mentally of saying, hey, time is precious, time is short. So we don't want to spend time, digging our claws into something that's fine already. I don't need to have my fingers in that. I can spend the time investing with family and doing the things that they want to spend their time doing rather than worrying about the finances. So it was not an easy transition, but I think he did it in a very, very healthy way.
And I think
Yeah.
you have to admit that somebody else can come in and see your business, what you do from a fresh set of eyes. They bring in not necessarily a wealth of experience, but they bring in a wealth of education and they bring in something that can help the business grow from that point forward. Their passion for the business can be just the same. It's just they come from not that the very start. They come in, you know, I wouldn't say halfway through, but at some level of maturity of the business. But they have the same passion to make sure the business is successful, right? And it's wonderful to see that happen in businesses. We've got a number of companies that are family owned, and we see the family interfacing with one another, and that business is thriving and growing because the people that started it, they're not micromanaging everything, right?
Yep. So good.
Yeah, and as we wrap up our time together, I think just some of the key takeaways are creating that clarity of purpose, knowing that your current plan maybe won't be the only plan that serves you best over the long term. So, creating that long term vision, being willing to change and alter, consideration of risk as it serves you well as a younger person, it's going to change as you go through different seasons of life, and how the use of risk becomes more of a tool, how and when you use it in consideration of diversification. So, as your purpose shifts and your plans change, it can get really complex. We always encourage people to have a team behind them. And if you need a team and somebody to talk to, we're here for it. And it's what we do and what we love to do every day.
Until next week, folks, may you grow in wisdom and knowledge. Thank you for listening.
We have a few more things to let you know about before we go. Podcast reviews really help us to serve more people and get this information into the hands of the people who need it. Please leave us a review. Even if it's not 5 stars, we welcome the feedback.
And we invite you to let us know what topics you would like to hear more about or what would benefit the people in your life who you're closest to. We have more resources online. Those resources are designed to help you share this great information easily with people in your life. To access those resources, please visit tricordadvisors.com.
Often we hear from clients that they wish they had talked to us sooner. If that's you, we'd be thrilled to see how financial planning can benefit your life. Email us at contact@tricordadvisors.com or simply click on the link in the show notes.
This show was produced by Graham Gardner at Model FA. Find out more about how to create a podcast for your financial planning business by visiting modelfa.com. We love creating content that's useful, resourceful, and maybe even a little entertaining. We want to make this mega universe of financial topics and advice applicable and helpful to your life.
Remember, at Tricord Advisors, we are your future's best ally.